Welcome, dear traders. Today is the final trading session on Wall Street before the Easter weekend. Trading floors will be closed on a Good Friday. However, the government data on the US labor market will be released tomorrow. The US nonfarm payrolls will determine further trends in the currency and stock markets. Now let's discuss market sentiment and trends on Wall Street before the long weekend. In the last few months, we have seen that the US stock indexes have given optimistic responses, even to faint signs of the economy's cooling down. Weaker economic data increased the likelihood that the Federal Reserve will hit the pause button in rate hikes. At a first glance, weaker than expected data on the private sector, employment, and the fact that the service sector is losing momentum should produce the same effect. This time, the market gave a different response. Among the three benchmark stock indexes, the Dow Jones is the only one to trade higher. The Nasdaq and the S&P 500 went down. Does it mean that the stock market has reviewed its priorities? Investors are trying to puzzle out whether the US Fed has gone too far in its efforts to curb inflation. Perhaps the US economy has approached crunch time and is now slipping into recession. Investors learned that Fed's policymakers still advocate for further monetary tightening. That's why Wall Street indexes are trading sideways ahead of the bank holidays. Besides, investors want to play safe on the back of mounting recession fears. The S&P 500 is trading with a slight downward bias. Within the intraday corridor between 4,122 and 4,105 points, it's premature to acknowledge a panic on Wall Street, even though there is plenty of evidence that the US economy is on the verge of a recession. The VIX index, which is unofficially termed the fear index, remains at low levels. Despite its growth to 19.6 today, the theory says that investors exhaust from risky assets will put the index up about 40 or 45 and even higher. Meanwhile, the US dollar found the catalyst for its growth. Its index gained bullish momentum in the early New York trade, trading with the intraday corridor between 101.80 and 102.10. Apart from its traditional role of a safe haven asset, the greenback also serves as a barometer. While the market is anticipating the US non-farm payrolls for March, it's closely monitoring all interim reports. For example, a weekly update on the US unemployment claims. Looking at the chart of the US dollar, we can judge the market response to this data. The US dollar index went sharply up against six rival currencies and climbed to 102.10. Judging by this spike, we can imagine what huge impact the non-farm payrolls could make on the US dollar tomorrow. What exactly agitated the market? The US Labor Department reported that the number of initial jobless claims rose to a lesser extent by 228,000 last week, from an increase of 2,048,000 a week ago. The previous figure was considerably upgraded from 196,000 in the unrevised reading. Such data proves that the US labor market remains tense. Besides, the fresh unemployment claims contradict the economic data released earlier this week. While market participants are looking forward to the US non-farm payrolls, it makes sense to discuss the report on Canada's labor market released today. The Canadian economy created 35,000 jobs in March, more than 21,800 new jobs added in the previous months, and much stronger than the consensus for 12,000 jobs. Despite the healthy labor market, the Canadian dollar slipped against its American rival. because oil prices halted to rally and the Bank of Canada took a break in a monetary tightening. The USD card pays a trading higher today, now at about 1.35, and today the instrument is trading within a narrow corridor between 1.34 and 1.35 with a slight upward bias. Perhaps the strong labor market will influence the next policy decision of the Canadian Central Bank. The Bank of Canada is the first among major central banks to hit a pause button in rate hikes last month. The next policy meeting is scheduled for April 12. Strong employment data could raise questions whether the Bank of Canada will resume rate increases. Bitcoin has to pull back today, and the US dollar's advance pushed the flagship crypto down, having surged to an intraday high at 28,298 yesterday. The token skidded to 27,934. The crypto failed to conquer the landmark level of 30,000. If selling pressure escalates tomorrow, Bitcoin will exit the trading range between 27,734 and 28,173, breaking the lower bound. The flagship crypto finds it hard to maintain bullish momentum due to a variety of factors. The crackdown by US watchdogs on the crypto industry, highly anticipated Ethereum's shift to a new proof of stake mechanism, and mounting pressure on a lending crypto platforms. And you have watched a recap of the North American session. We hope that you are completing a gainful trading week. Our team wishes you a happy Easter and a sunny and warm long weekend. We wish you profitable trading with InstaForex and see you soon.